In February, you wrote that the Trump market honeymoon was over, but U.S. equities obviously headed higher. What warning signs did you see then, and are those indicators still pointing to a decline today?
Well, I said that the market was moving sideways and that honeymoon could last for a few more quarters, but I think that what the markets are doing is they are overestimating what Trump can do and the impact of what he's going to do in terms of taxes and regulation on the growth rate of the economy. I think he's going to do very little, and the potential growth of the U.S. is barely 2%, and his policies are not going to be increasing potential growth. So I think markets overestimated the positives and they've underestimated the negative. So the honeymoon can continue for a while, the sugar high can continue for a while, for a few quarters, but there's the positives, and the market start to realize there's not much in this tax plan. It's not a really tax plan, it's a one-pager, it's a bit of a joke, and they're going to realize that the positives are less positive and it's not going to implement them, and the negatives are more negative. I think that eventually a market correction is going to occur, the economy is going to slow down. I have no idea whether it's a 3-month horizon or a 6-month horizon or a 12-month horizon, but I don't see this policy mix as being consistent, coherent, and leading to stronger economic growth and stronger markets over time. But there is sentiment right now that is positive. The market is slightly euphoric, but I think they're vastly overestimating what Trump can do.
But at some point, they know that they actually have to deliver a tax plan that Congress can approve, right?
I'm not sure what they're going to be able to deliver. If they keep it revenue neutral, since they don't have the taxes coming from the border adjustment or the repeal of Obamacare, then they cannot go more than from 35 to 30%. Now I think that they've decided who cares about the deficit. They were hypocritical, they kept on complaining about the deficits. Once they're in power, they say, hey, we don't care about the deficit, and they want to now do tax cuts as opposed to revenue neutral tax reform. If they do that, my feeling is that there is going to be damage because the market is going to see trillions of dollars of additional debt and deficit. That's going to push higher long-term interest rates. That's going to push higher the value of the dollar. Higher long-term interest rate means less capital spending, means less real estate investment, and a stronger dollar means we're going to destroy millions of jobs of white blue collars in manufacturing and industry and even in services as well. So there'll be market discipline if there is not political discipline.